Hey everybody, Courtney Smith here. Well, Merry Christmas here. It's almost here. And I've got a dashing new hat there. I like it. And don't forget, we do have some interesting market holidays coming up Thursday. The market will have an early close. You'll see on Friday, December 25th, it's closed. Thursday, New Year's Eve, it's open, but on Friday, it is closed. So, Friday the 25th, Friday, January 1st, it both closed and an early close on Thursday. But there's no early close for this. Okay, S&P. Now, a couple things are going on here. First of all, we made new all-time highs, as I told you we would. Now, we normally get a little dip. We got our little dip. Now we should be seeing our Santa Claus rally. The heavy volume last Friday, that's no big deal. That's a quadruple witching hour. Okay, witching day, I should say. That's when we have all of the futures and options expire on the same day. So tremendous volume, but it doesn't really mean anything. Now, what does mean something is notice that the purple predictor has started to degrade. The market made a new all-time high, but the purple predictor did not, showing that the smart money is starting to bail out. They're starting to take profits on their S&P positions. Now, in the Dow, we see here, you can see that the selling pressure is low, but the buying pressure is getting lower, drifting lower. We're just not getting much excitement. Now, some of that can be just simply the holidays, people going on holiday. Like me, I'm on vacation right now, except when I'm talking to you, of course. Now, the other thing is look down at the little green line. So that's the RSI, and this is typical across all the indexes right now. Notice that the Dow is making higher highs, but the RSI is making lower highs. In other words, it's a market that has no real upside momentum. So it doesn't mean that it's going to be a bear market, but it means that really the explosion to the upside in the market, maybe we get another week, a Santa Claus rally, get into the first week of January, but I think we're going to see a dip in January. Well, I'll show you why in a second. Now over here, the NASDAQ, the purple predictor is fine. Nobody's bailing out here, so they're shifting back into technology stocks and out of the old economy stocks. Seasonality remains very bullish for the stock market. Utilities, we rank it simply as neutral. Now, here's what should be happening. We should get this Santa Claus rally. We should be using the green line. That's the sitting president running. We could use the blue line, but we don't. But the open field is irrelevant. So we should get a nice rally here right into really the first few days of January. Let's take a closer look. Here's the seasonality for next year from Stock Trader's Almanac, which I highly recommend you buy. So let's break this down, because a couple of these lines we're going to ignore, a couple of these lines we're going to focus on. So if we look up at the top, we see a black line and then a kind of a dark blue line, and that's all years. But since we have a presidential cycle, I always look at the all years, but I like to really focus more on the more specialized ones. So the light blue line, which is pretty relentlessly bullish, that's all post-election years. Now let's come down here to let's take a look at the ones that are more reliable. So post-election years, that's the green line. And you'll notice that it kind of stumbles through January, then has a dip into February. So it's not really very bullish, really, until April. Okay, and then we get a rally into June. Let's take a look at the purple line. That's a first year of a Democratic president. This is just bearish. This one and post-election year after incumbent party loss. This is really the ones we want to look at. We want to look at, unfortunately, they're the three most bearish, all post-election years. Then the purple line is first year of a Democratic president, and then the red line is post-election year after the incumbent party loses. This says we're going to have a dip in January, a little rally up into early February, and then a sharper dip really down to the beginning of March. So look for a rally here over this next week or two, but we're going to probably be taking a lot of profits at that point, quite frankly, because this early part of the year, the first 2 months, look pretty bad for the stock market. Asset allocation moves up again, so we're sucking money out of the bond market. They want more risk. This is bullish for the market as well. Global shares make a new all-time high. That is fantastic as well. There's a lot of bullish news still here. Yield curve creeping higher. That's getting more and more bullish. I like that. It's that momentum that makes me nervous. Okay, bonds started to collapse again. They were down 5 straight days in a row. And as you can see, the purple predictor is really just starting to move sharply lower. Bond key factors generally still say higher interest rates. And I think that makes perfect sense. The dollar. Now, I highlighted this for this reason. The dollar made new lows, as I've been telling you that it would be. But I think that the bear market in the dollar might be over. Now, this is going to have a lot of ramifications. So I think, first of all, we're seeing the dollar make new lows, but the RSI, when the dollar broke to new lows, the RSI did not. That's the green line above it. We call that a momentum divergence, and it should cause at least a several day rally. So in other words, this week I'd look for the dollar to be stronger. The big bear market may not be over, but at least it is for a week, let's say. Gold should then get some pressure there. In other words, the rally that we see here is probably not going to carry on much further this week, but maybe later. We'll see. Our gold indicators, though, are now all bullish. All of them. Even the ones that only fully paid up members see are all bullish. So that's really exciting. I want to be long gold. But let's go back to this chart. We've just made many new higher highs and higher lows. So that's a good sign. But I really think that high back in November, I can't really get excited about the gold market unless we break above that high in November, and then I'll start leaning on this market. Okay, crude oil has just done much better than I thought. Looks like we're going to $50. What this really shows is that there's very strong global demand, i.e. the global economy is doing better than people think. And finally, Bitcoin. Well, I was wrong on this one. It exploded to the upside. I thought it would just drift lower. I was saying that people should take profits, but it broke to new highs, and I think that means you should be long. All right, fully paid up members, hang on just a second. Freebies, thanks very much for coming in. Hey, freebies for Wall Street winners. Really appreciate having you here and love to have you participate in the Wall Street winners every week. But I also wanted to show you where I get a lot of my information and where I monitor my information, and it's from the Stock Butler, stockbutler.com. And what it is that it takes the system that I teach in my Stock Financial Freedom System course, my live 2-day seminar, and it codifies and systematizes and makes it super easy to use. Let me just show you some of the things. I would go there, read their literature. That's really great. But let me show you a couple of things that I use. So I always talk about in Wall Street Winners our best of the best stocks. Now, when you're a fully paid up member, you see my best of the best stocks. But for example, I can come up here and I hit rate and I go to best of the best and I click on it. Now I've already signed in. There it is. There's my best of the best stock. These are the best of the best stocks that you should be looking at buying. In this particular case, you can see the green one is a new one this week. So guess what? In the fully paid up section, this is a new recommendation. We also, Stock Butler also rates the stocks A, B, C. Here is a change. This one was changed in its rating. So it does some amazing things. It makes it super easy for you to trade, to monitor. It also has other techniques up here. Our hot hands, our pit bulls, seasonality, advanced stock list, many different ways in order to find great stocks and then to monitor them. So when you click on one of these stocks, it comes back and it tells you how the rating occurred. Here's the actual analysis that went in to rating this stock a B. Incredible. And the cost is nominal. I highly recommend it. Go there to stockbutler.com and check it out. I think you're going to love it. Talk to you later.